Thanks everybody for joining. Welcome to another episode of VCTV hosted by our good friends LATOKEN. My name is Alex McDougall. I'm filling in hopefully ably for our usual host Kyle Ellicott today. And we're extremely excited to be joined by a crew of experts and talking about one of the most hot topic items that works into this VCTV schedule. Blockchain and fintech, and it's an expansive topic. We've got a lot of people from a lot of different verticals, different parts of the world, and with different pieces of expertise in it today. And obviously the world has drastically changed over the last 6 to 8 months, and with it in such a dynamic, fast-paced, moving industry, such as blockchain specifically, but fintech as well, in sort of a broader scope beyond just the asset itself. There's a ton to talk about. And so we're really excited to dive in today. We're going to go through the state of the industry, where the opportunities are, some of the latest headlines and evolutions, and really get a chance to know our panelists and know what they're working on. So the way we're going to start this is a roundtable introduction. And so just give us a sense of where you are, how you got into the industry, what you're working on today, and then we'll go a layer deeper from there. So why don't we start with you, Lawrence?
Yeah, thanks, Alex. Hi, my name is Lawrence. I'm one of the founders of Blockwall, a blockchain-focused venture firm out of Germany. We launched our first fund in 2018, after it took us about 1.5 years to find a good regulatory setup, and which ended up for us being a regulated entity out of Germany. We're setting up closed funds. Our first fund was focused on token investments only. It's still running for another 4 years. And we're in the process of raising a second fund that invests in blockchain-focused startups, so equity only. And we've just recently launched the European arm of the Blockchain Research Institute out of Toronto to further bridge corporates with this technology from all angles. And I started getting into this space in about, I think it was 2014, while I was living in Zurich, and some technical friends of mine showed me what it is. And so I'm coming from the commercial side and learned to love tech this way. And fantastic. Apart from that, I'm 35, living in Germany, and have 2 very intense kids.
We were talking just before the panel about methods for bribing our young, very intense kids to give us some peace. I have a 1.5-year-old daughter in Toronto as well. Super interesting on the Blockchain Research Institute. Obviously, that's the larger think tank run out of Toronto by the Tapscots. Done fantastic work and has some really, really big names attached to that. So very cool to see that being launched and grown in Europe. Adrian, would you tell us a little bit about yourself and your background?
Hi, Alex. Hi, LATOKEN team. I'm very happy to be here again. My name is Adrian Niculescu, and I'm involved in few projects. One of them is Faster Capital, which is an accelerator and incubator for startups. It's Dubai-based. Also, I'm CMO EMEA for CloudCoin Consortium. CloudCoin is a next-gen digital currency running on post-blockchain technology called Radar. And it's the only quantum safe currency at this moment, and starting at the end of September will appear on lots of high volume exchanges. You can go to cloudcoin.global for more details. I'm also mentor for Virgin Startups program, and very happy to be here, and hopefully will add value. Thank you very much.
I am confident that we will all add value. No, thanks. That's super interesting, and potentially something we can dig into on this. The whole idea of, we have this sort of core fundamental idea that this industry is cryptographically safe and cryptographically secure, with this sort of big boogeyman that we always kind of push out to the distance a little bit of the idea of quantum computing coming in and really invalidating that thesis. And when you're trying to build a fundamental value proposition, especially over a long period of time, you need to make it tech resilient. And so maybe we can dive into a little bit of sort of the black swan scenarios of quantum computing for some of these assets as well a bit later. Alberto, yourself.
Hi. Well, my name is Alberto Navarro. I am based in Mexico City at the moment. I am head of product of Arcangeles.com. Arcangeles is an equity crowdfunding platform. We mostly focus in high growth, high accelerated startups, not focused completely on blockchain, but we have a strong focus on blockchain projects. That's where I come in. I came into the industry around 2013 when I was living in Germany. When I started using Bitcoin and when I started attending Ethereum meetups and witnessed firsthand what was going on with the creation of the DAO and the birth of Ethereum. Since then, when I moved back to Mexico, I started a meetup and the communities to talk more about blockchain technology, and that derived in also a consultancy startup that I run here. And well, yeah, that's basically it. I've been trying to push blockchain technology in Mexico, but there are things that I think we're going to talk about in this panel that are the limitants in a third world country like this one, trying to apply this kind of nascent technologies and in comparison with first world countries like Europe or Canada or the US that are already using them, and how I think it's going to be very interesting to talk about all that today. So good to be here and good to be with all of you today.
Awesome, and that is a super interesting point that that I would like to circle back on. There's one school of thought that it's somewhat easier to launch these truly disruptive products in a country with less infrastructure, similar to how African payments migrated right to mobile. But there's also, you know, the incremental approach of having the regulatory framework, having the institutions, having the sophisticated investors that can make some of this this launch and rollout a lot easier as well.
Precisely.
So I'd love to get your thoughts deeper on that. Ajit?
Hey, my name is Ajit Khurana. I'm presently in Bombay, Mumbai, India. So in about a career spanning close to 30 years, I have spent most of it as an entrepreneur myself, set up 2 ventures. So that took care of like about 60% of my career. The rest I have spent primarily working with early stage ventures. Now, in doing so, I have been an angel investor, even a full-time angel investor for 4 years. I worked for one of India's top 5 VC firms. I headed the business incubator at IIT Bombay, which is one of India's premier engineering schools. And if I rush to my last 3 years, I kind of got wedded to romantically the blockchain space. So I spent 2 of those 3 years as CEO of Zeppay, which at one point was India's largest crypto exchange. Then we spread it out to many other countries, including incorporating entities in Malta, Singapore, Australia, etc. And I also headed for a short while the Blockchain and Cryptocurrency Committee, which is India's apex body for at least crypto exchanges. But the thread that you can take away from my entire 28 plus years of career is that I have always been focused on setting up new things, as in the 0 to 1 phase, as in going from nothing to a lot. And that is why I like to work with entrepreneurs. I have worked with incubators, have had my own. I have worked with funds. I'm setting up yet another VC fund of my own. I presently am mentoring several startups who are trying to create projects on the Matic network, right from payments to stable coins and a bunch of those. My kick, and I hope this is not against the religion of everybody in this call, my kick is not blockchain. My kick is not crypto. My kick is creating something from nothing and then starting from zero and creating something. Blockchain and crypto just offer phenomenal opportunities to do that. So that is what attracts me to this space. And I hope to be one of the drivers of this space in India, at least, and probably globally.
So we're all about destroying things here, so that's completely against it. No, that's a super interesting point, and I think that does run sort of bone deep with anybody who's getting into the space of, this is one of the first fundamental infrastructural technologies that allows the power of the individual to be able to be presented throughout a network. You don't need to piggyback on existing infrastructure. You don't need to work within the existing system. With the power of this technology, you can create something that's net new that doesn't exist today. And I don't think we've had that ability ever in humanity since sort of the earliest stages of us organizing into societies. Okay, awesome. So super interesting group together. Myself, I'm the co-founder of something called Bicameral Ventures that's run out of Toronto. Actually, somewhat similar to Lawrence, we ran a venture fund on the token side back in 2018 as well, really with a focus of building the layers in the technology stack to get a user experience that a grandma could start interacting with this technology, because that's what we need to get the billion people on board instead of the 20 million or so that we have today. So we looked at it from a full stack approach, and really want to dive into your evolution from tokens to equity and the actual business models of how you invest in these projects, Lawrence. And now we're focusing on a fund that allows institutional investors to access the yield and liquidity of DeFi platforms from a more traditional vehicle, and sort of adding some logic and value to the DeFi space. And I think that's a good transition into our first topic of discussion. DeFi's exploded 10x roughly in the last year, 85x in the last 2 years, but we haven't seen, or we really haven't seen kind of a lot of that's focused on the institutional side, not really necessarily driven by retail investors. We still only have one Bitcoin ETF really in North America. We have another one in Switzerland as well. And we haven't really seen the security token boom that a lot of people really hypothesized was coming from 2019 onwards. What is the state of investing today? The ICO boom's over. It hasn't really been replaced by anything else. A lot of funds are migrating from tokens to equity base. Where are we as an overall investment industry today? And maybe Alberto, we'll start with you.
Well, I don't know. I think, as you said, DeFi has been exploding, but right now, at this minute, there's also been a couple of debacles with all these strange tokens that have been emerging. I have a couple of very good friends that run arbitrage funds, and even they tell me, like it's not that easy to interact with DeFi. So for a normal person or for retail investors to start interacting with this kind of technology or tokens, I think there's still a long way to go for that. I think the way that the current wave of investments are definitely being pushed by innovations that not a lot of people understand. We will have to see in a couple of years what happens with those. I think ICOs haven't been replaced by anything really, but I think the proof that they didn't work was then back there in 2018. I think speaking precisely from the point of Mexico, or at least Latin America, something like MakerDAO was extremely interesting, at least for places like Argentina or Venezuela, because it actually lets you buy stuff like dollars in countries where the purchase of this asset or like of this currency is completely restricted. So I saw a couple of applications that went off the floor immediately when they offered normal investors or normal consumers to get exposure to the dollar without letting them, like, giving them a turnaround to the system. So I think projects like that have a lot of potential to help a lot of people in areas like this one. Specifically about Mexico or Arcángeles, we have been looking for great blockchain projects, but the problem is that normally venture capital is not interested in things that are mostly focused on research and development. Let's say something that doesn't deliver immediately on a solution. So what we have been seeing right now in Mexico is a shift to blockchain projects that are mostly focused on identity and identity theft and electronic signatures and sort of a document management. That's becoming very popular right now over here. So we've been starting to see like a shift into this kind of projects. I've seen like in the last year around 5 that offer all these document management systems and time stamping on the blockchain that are really starting to pick up. And this is very in line with the current situation because it just turns to the digitizing of the entire industry as a whole. And I think, like, as a finishing point, I think that's the first part of the infrastructure that we're looking for, like all this digitization of the businesses so that then they can start innovating in other terms.
Yeah, super interesting. And essentially putting the infrastructure in place to allow us to get to machine speed business models, right?
Exactly.
Like there's so many breaks and forced friction points in the current world by even just something as silly as a physical piece of paper that requires a meat computer to read it and do something before we can get back to our digital looping world that moves extremely quickly, right?
So you can see immediately this impact, right? Because this is immediate solution. So everything, all this DeFi boom, it's kind of over there. It's more ethereal, So you can't see a lot of interest from investors on this side on this area, I would say.
Super interesting, and I want to dig back into that of the main street implications of blockchain and where you can really start saying, hey, here's a business model, here's how we can do a business model better by using this technology, versus the DeFi side of, hey, you could go with a 1% money market fund, or there's these platforms over here that theoretically offer similar yield and liquidity and are earning 7 or 8%. What's the actual delta between that? And a lot of that is sort of how we package up the value proposition of this technology to people who are just new to the industry entirely. But I totally agree with you that retail exposure to DeFi and using those platforms directly is a very challenging proposition right now.
Precisely.
Laurence?
Yeah, so I completely agree with what Alberto said. I just want to add another angle, which is more dominant in our space here. Our use cases for blockchain as a technology, in particular on the equity investment side, are primarily driven towards automation of B2B processes. So we don't really we see a lot of retail products that are blockchain based, but really where we see a huge angle is identifying and matching business processes where a blockchain solution actually makes sense to increase speed, efficiency, etc. So this is really something that we're getting mirrored from corporate clients that we have, so where they're thinking like, where can we create an edge to our existing business case, or where can we create a new one? So this is definitely where we're seeking our, what we would call category winners in terms of where does this technology actually make sense, which also then ties in what we did with our first fund, where we explicitly invested in protocol solutions, which are really the essence of making this possible. And around all this, which at the end of the day is fairly quote unquote boring B2B business solutions, I'm happily following what's happening on the DeFi side, because this is exceptional research. Research on the go. It's like building a speedboat at full speed. And I'm curious how this is going to turn out, because in my opinion, it'll take years before institutional money would actually put a lot of money in, because as I said, it's research. And what we're trying to bridge with our equity fund is what is not research any longer, where's this little blockchain component that adds value, and how can we make it into a sustainable business case? How can we add to make this a sustainable business case? So at the end of the day, we're trying to be pragmatic. I mean, conceptually, I think DeFi is something really, really worth pursuing. But as a fund investor, I need to look into something that I can invest over the next 3 to 5 years. That's giving me a return in the then following 5 years, because the fund is only running for 10 years. So a realistic approach is something that we always try to push ourselves into view.
Yeah, and I love that idea. It sort of echoes what Alberto was saying of VCs need something that's tangible and returns something quickly, or not even quickly necessarily. But I'm with you that especially from the equity investing side, the companies and the projects that are incrementally improving existing business models, particularly what we're looking at from the corporate and the enterprise blockchain side, the equity model in those makes sense. And there's this sort of schism, and Alberto, you referred to it as it's something that's over there, is that these are entirely new business models that are being created at full speed. And it's very different things, but it's sort of building the links between those two that I think are going to be the most successful funds that can sort of bridge these today world problems, today world solutions, today world upside with these future business models that are rapidly innovating and coming online. And that bridge is super interesting. One other thing I might want to circle back on is just the idea that for blockchain, especially in an enterprise context, to really add a ton of value, it sort of needs to be a collaboration mechanism between multiple enterprises. So a full supply chain, a marketplace, something along those lines instead of internal to one. And getting competitive enterprises to cooperate to create shared infrastructure, obviously a huge challenge. So curious how you're bridging some of that stuff, but we can dive back into that a little bit later. Ajit, where do you see the industry these days?
So I'll actually comment on one part which you did bring up in the original question but has not been touched upon, is the security tokens.
Please.
From mid 2017 to mid 2019, I think not a single day passed without some sort of a debate about, is this a security, is this a commodity, and what is a utility token, and can you just refer to something as a utility token in the white paper? Is that adequate, necessary and sufficient condition for it to actually be a utility token? And this debate didn't end. I just guess we all got a little tired of it, hence we don't hear about that too much. What happened is that just like way back in the late 80s, early 90s, we had digitization. We assumed that by now we would have tokenization. And while there is a lot of regulatory gray area around tokens, but there isn't too much of a gray area around security tokens, because they are, by their very name, securities. So what happens is that they inherit all the limitations of securities, but unfortunately, they do not simultaneously gain from the benefits of being a token. What we had hoped was that, okay, we will succumb to all the IPO, initial public offering related regulations, but then we would liberate these tokens out on the public blockchains where they would assume life of their own, as utility tokens in the past have done. But that did not happen. When I was in Singapore, I had approached a law firm to find out more about a security token offering. They said that in the Singaporean law framework, it could be done, but the legal fees that they were charging was actually exactly the same amount as would be charged for an initial public offering. So what I have found in a lot of situations where people were considering an STO is that while they thought that maybe getting the offering subscribed might be a little easier because of the novelty factor, if nothing else, but the compliances were so huge that they felt that might as well do an IPO instead. To the best of my knowledge, they did neither. But I'll just throw out one little regulatory piece there just to explain how crazy this goes. So you offer an STO, let's say in Switzerland somewhere, and you limit it to only people in Switzerland. Let's say you go that far, that you will not sell it to anybody else. Defeats the purpose, but suppose you did. Even then, at a secondary level, if a US investor were to buy this from an earlier investor, suddenly now you have to comply with the SEC guidelines because the US investor has been. So you would have to keep it away from even secondary sales. That is not realistic in the way the blockchain world works, unless you had some safe harbor kind of approach, which once again defeats the purpose. So I think that is why the STO boom probably is still coming and going to keep coming just for the next 10 years, but I don't see it happening anytime soon.
Interesting. And yeah, I agree with your general point of security tokens. You can theoretically make them regulatorily compliant by just doing what we have as existing securities and adding a little bit of value to them. But yeah, to your other point, the investor side, you say it might be easier to fulfill an offering. I think it might actually be substantially harder because there's this sort of black swan unknown of, oh, this is a crypto asset. And if you're not giving an incredibly tangible value proposition to offset this unknown risk, then you're playing from so far behind with just traditional institutional investors. So it needs to be something that is like absolutely game changing in order for them to be willing to take on this risk or do the work to get themselves up the curve, which is obviously challenging as well. But yeah, I still have a ton of faith that there's back to Lawrence's point. There's meaningful value to be created and captured from even just digitizing and automating the back end of our existing securities framework, which is a no-brainer. But even creating sort of the next generation of security tokens that creates business models and fundraising models that don't exist and can't exist in today's world. But we're nowhere near that still. Adrian, what about yourself? You're just sort of operating at some of the farther ends of the spectrum with your quantum resistant tokens.
Regarding the investments, it's important to look on the short term, medium, and long term. Let's say in the cards market, we have Visa, we have MasterCard, we have Amex. New players will come, and for these players to emerge somehow, will be needed a lot of investment in research, because it was brought into discussion that the research doesn't attract investment. I saw some articles, and this is a subject which is controversial. In Silicon Valley, there were studies made on a period of like 10 years, and so many of the funds, the venture capital funds, based on this research, didn't seem to be profitable. So the administrators made most of the money from the annual percentage, 1-2% they take from the money they manage. Because in that article, very interesting, you need to have at least, I don't know, one unicorn for the fund to be profitable. So I don't want to get into details, but I see a huge opportunity. Of course, decentralized finance can be a passing trend or not. Nobody knows. It's a very interesting concept, and the summer and autumn of ICOs somehow is repeating now. Somehow, there are some new tokens, new business models. If you look at the exchanges, there are many coins with a lot of growth over a short period of time. Of course, some of them are just pumps and dumps, but besides that, there are new business models, and somehow the ICO autumn from 2017 will repeat this year. So I'm looking actively, and I know a lot of people from the investment space, looking at which could be the platforms which will be the base for the future development. So like, who will invent the next Visa? So if people will use that technology, will need to pay a license. The technologies which arrive to be patented in United States especially, they have a huge advantage, because if they are used correctly, they can become the platforms of the future. But of course, to look at those, you need to have a very long-term approach, and to afford to think like that and to act like that. But let's say if we invest, I don't know, in 20 startups or 10, or maybe one of them to be oriented towards this type of the research, which could generate the next Visa, the next MasterCard, or the next Ethereum, where so many other tokens are built on Ethereum. So they pay something to Ethereum to be there in gas or whatever. So I believe this is the biggest opportunity to cut to the fog, to cut to the shiny objects, and to understand which is the direction of the market, and how can I find some projects which will be the base for the future developments, and everybody will pay a license to use them.
Licenses are an interesting topic in open sourced code as well. But no, it's a super interesting thesis, that what is going to be the platform of the next, what's going to be the underlying mechanism that powers the next wave of investments. And we've seen Ethereum essentially be the value capture mechanism for DeFi so far. And whether that's a passing phase, or whether we do start to, as Laurent's mentioned, break some institutional capital into those maybe not the existing platforms, but that style of investment of trying to replicate cash management, and trying to replicate the treasury management in a more efficient and more upside way. What is going to be the next platform that powers all of that? Alberto, I want to circle back on something you'd mentioned before, and it's something that sort of permeated a lot of these talks so far. And I think that there is this sort of fundamental disconnect in certain times of not being willing to fund research and development from sort of the traditional venture capital mindset, which requires a unicorn, requires 10% of your startups to succeed on a massive scale and expects 90% to fail, and is really this this world that shuns uncertainty to a certain extent. I want the this but this, the SaaS model but with this twist, or all of these existing frameworks and business models that we understand. And obviously a lot of funds are sort of moving back to that model after the 2017 and 2018 collapse. How do we, and I recognize this is a big question, so I'm going to get everybody to kind of jump in on it. How do we re-incentivize venture capital funds or funds in general, or is VC sort of an outmoded concept in this, to be more okay with uncertainty, to take this 15-year horizon, to not necessarily think about, okay, well, I need to report a 15% IRR so I can go and raise my next fund, and I need to report it in 2 years, otherwise I'm out of business. How do we start sort of changing that narrative?
Well, that's a great question, and a very tough one, actually. I think the most important thing in this case are LPs. Right, like a venture capital doesn't rule itself. It has LPs to answer to. So that's why every venture capital is looking for that company that will give it that 30x, right? All of the other ones, and they all expect every company to be that 30x, but then they all start falling apart, and they're like at the very end they just start looking for those last two that are going to be able to save the fund. Now at this times and talking about the subject of this panel itself is at the beginning of the COVID situation, all the VC money just retracted completely. Like, no, we're gonna save ourselves to see what happens in the coming months. We're gonna see what happens. So now you can see again how their heads are starting to pop again out of the ground. To look for companies that were able to adapt and for companies that were able to survive this past months. So talking about blockchain itself, I think over here, it's not about research and development, but it's still very nascent. You see a lot of companies, you see a lot of blockchain companies that offer, like this smart contract solution, but there is no sort of a value proposition in itself. So in Mexico, everybody wants blockchain. In Latin America, everybody wants blockchain. All the banks want to implement it. Everyone wants to apply it, but nobody seems to understand what they're buying unless you have a fixed product. So, and for that, you need like a very talented team. You need a lot of time. You need to put the time into it to really build something that is going to be useful for the general public. So everything lands again in some exchange, in some centralized exchange, like the main one over here, Pizzo, or all these companies that I was talking about, like that are starting to manage contracts at the timestamp and that offer censorship-resistant storage. There's a very interesting one I know, Sincel, that just came out to the market that are offering exactly this, censorship-resistant storage and blockchain managed contracts. So when you see this, you start to see the interest again of VCs to start like pushing this kind of technology that is really going to bring some value to Mexican startups or to Mexican companies or to banks, to the establishment. But the problem I see, at least in this area, is that since talent is normally scarce, then you don't see this connection between talent and the VCs. So they all the time they need to be looking outside of Mexico to see what the business propositions are, and to see if they can find something that is similar around here, and even then they are very what's the word, scared or scared to just jump into this until they see somebody else that jumps into the water and just starts fueling this industry, right?
Yeah.
So the problem with this is okay, like things around here, like there's this certain way that things work around here, and for every area itself as well, right? So what we're expecting, or like I would be expecting, or I would be hoping in the coming months or years, maybe after this normalization, is funds, for VC funds from the US to start coming over to the Latin American area to start looking for like what is true potential, you know, and then in that case that is going to incentivize other VC funds to start jumping into the waters as well, because like prices are going to be normalizing. Normally a VC will tell you, no, you're too expensive, or no, I'm gonna wait for the next round. But what you want is to push them forward to say, yeah, okay, if I don't jump in right now, then the next round is going to be 5x more expensive or something like that, because somebody from the US or somebody from Europe just came and looked around and found some talent and built a remote team or built like an international team to push a certain value proposition that can bring a lot of value to people around here. Right. And then all of a sudden you have a valuable company that's bringing a lot of value to users, and all of a sudden all the Mexican, Latin American VCs also want to jump in. So I think that would be like the best incentive, you know, for more professional or more international funds to come around to the area, to come around to this region, to see what is really bringing value to users, and to promote that and to push that, to also incentivize and normalize the situation around other VC funds in the area.
Yeah, super interesting. It's like a catalyst essentially, and you need
Exactly.
one success story that becomes a virtuous cycle. Yeah, and I feel like to a certain extent, we need the deep R&D success story as well, that doesn't pay anything for 7 years and then explodes in value with something that was completely outside of the box. And obviously there are those examples of success stories. I mean, the other concept that I consistently play around with, and I did a couple panels with Burning Man last week, that was a lot of fun to dive into some of this stuff. You know, how do you change it from an IRR concept to, or even taking it away from a profit maximization concept? We're getting the ability to calculate more and more biometric data. We're getting the ability to calculate more and more of our world. Can we change what we're trying to optimize for in terms of a VC fund entirely? Can we create a capitalist VC fund that's all about efforts in smaller areas of the world? Like, there's so many ways to play with that model when you're taking money out of it and replacing the inputs and outputs. That totally separate conversation. But I want to give anybody else who wants to jump on that topic a chance, and then we'll get into the roundtable wrap up. Ajit?
I would like to come in. So here's the thing, you know, this last bit that you talked about replacing the inputs and outputs. I think that what we are seeing in the venture capital space, because I have been in both the venture capital space and in the crypto space, and now I'm again in the venture capital space, is a little like what we saw in the vested interest in either big pharma or in big energy. Namely, everybody knows fossil fuel related energy is not the best way to go. There is electric, there is photoelectric, there is, you know, whatever, solar, there is renewable, blah, blah, blah. But the biggest monies and biggest players are already after fossil fuel. So it is very difficult to fight against the biggest entrenched games. So what is going to happen is there are going to be these relatively maverick challenger, Elon Musk kind of guys who come up and try to do something. And most of them, frankly, will be trampled along, under the sheer momentum of the big pharma, big energy, and now I would say big venture capital also. And in the sense of, the previous speaker talked about LPs have to take the lead, but even LPs are suffering from a similar, dinosaur problem. So when we will see a bunch of these new maverick startups coming in, doing the some of the stuff that you talked about, that could you like have a VC that invests effort? Could you have somebody who says my output is intellectual property, not revenue, and a bunch of other things? Some of them will become very successful. It has to be, because so many of us are going nuts over this. And once that initial trickle starts, the trickle changing to a tsunami is like, I think if you look at other industries, probably like a 5-year cycle, right? I think we are already at the early stages of the trickle, probably even the late stages of a trickle. So it's just a matter of time now. It's going to happen that most of the dinosaurs will not be able to evolve. But as people know that today's modern day home lizard is actually of the dinosaur family and continues to survive. So those of us who can, from the old classic industry, evolve, they will continue to exist and probably thrive.
Awesome. Let's build it, Ajit. We'll talk after this panel, all right?
Absolutely.
Yeah.
I'd
Lawrence,
like to
you wanted to jump in?
Yeah, I'd like to add to what Alberto and Ajit said. At the end of the day, it's still investing. So if you invest in a blockchain startup, you still need to add value as a venture capital investor. So and the company still needs to create revenue. And the fact that their product may have a blockchain component, well, so be it. But at the end of the day, it's a business that should be sustainable at some point and therefore create sustainable value. What I would add is when it comes to token investments, this is really something that is new and that creates a completely different paradigm. So from our experience, our LPs, they trusted us to do that because they understood that technology itself is deflationary. So once, like what Ajit said, once you reach a certain threshold in this development, it's just going to be there and it's going to be a massive wave. But to be able to select and to invest into this, you need a certain flexibility, in particular due to the fact that token economies are insanely volatile, even though it's early stage, which is why we chose closed fund investment structures to mitigate that. But at the end of the day, what we do with token investments is also we try to put the dots together to create value, but from a different point of view. And the classical sense of my IRR needs to be this and that. Yeah, at some point it's gonna even out. But since this is a new industry from that point of view, at least our LPs, they are in this for the groundbreaking aspects it can bring, which I mean should bring a decent IRR at the end of the day, to say the least. But really to be in it and to be in it with someone who can evaluate and act accordingly. This is, I guess, the core point that any investor that's taking on third-party money should be very prudent about to actually be able to fulfill.
Yep, agreed. And there needs to be, you know, this sense of wonder sounds fluffy and silly, but in order to put the capital and have the staying power in this type of industry, you know, you do need to be expecting something groundbreaking to come out of it. I don't think many people are investing in this industry to chunk out a 12% IRR a year. You're investing in it to change the world, right?
Yeah.
At least at some part of your core, and maybe that reflects in a 50x return, or maybe that reflects in, you know, a different fundamental business model that we operate on, or a different way that we've organized our society. But you know, so Dave has just joined us. We just need to get into the final rapid fire round. Dave, do you want to give us a quick background about what you've got? We've got about 5 or 7 minutes left in this panel.
Absolutely, guys. Pleasure meeting everyone here. So we're working on the infrastructure side of things. We develop, hyperscale data centers, but converging on a lot of mining infrastructure as well. We've made, some investments, in other projects in the blockchain space. But right now, really excited about the infrastructure that everybody is going to need for this Web 3.0. Galaxy is, I am a managing partner at Galaxy Capital Partners, and we're really focusing on building that ground level infrastructure for everybody to use. A little bit of a different strategy from other VC firms here, but we're really excited about enabling and creating the right infrastructure for everybody to participate and kind of go towards this Web 3.0 revolution that we're going to see.
Awesome. Say what's up to Yoshi for me. I haven't seen that guy in ages. Okay, perfect. Let's go around just very quickly, 1 to 2 minutes, final closing thoughts. We've covered a lot of ground here in a short period of time and gotten some really interesting points out. Let's maybe start with Adrian. And also, sorry, last piece, where people can find you online, social media, websites, where you're at.
Of course, I'm on LinkedIn, Adrian Niculescu, and of course, I have adrianniculescu.com. And my closing thought is that all startups should focus on producing revenue, some kind of revenue. Somehow, I'm obsessed with revenue. Even if they are not profitable, if they are bringing revenue, if they have more users, if they have more contracts, the VCs will back more and more, especially if the business model is a sane one and it's not, I don't know, a scam or a fly-by-night stuff. So focus all the time on growth and on bringing revenue. This is cash is king, even in electronic form. So to bring revenue, and I'm obsessed by that. Thank you very much for having me here, and can't wait for the next panels in the future.
Thanks, Adrian. And yeah, revenue means somebody finds some value in what you're doing. It's easy to give away things for free. Alberto?
Well, first of all, thanks for having me. This was great. I learned a lot from all of you guys. So this was a very interesting panel. And then again, as a closing statement, I would say again for funds and for people to come all over to the Latin American area and to see also what we're doing over here. You know, because I normally tend to see like a very low investment rounds over here, and people don't realize how cheap startups are around here. You know, so I always think about Latin America as the last frontier, together with Africa, about that from venture capital. You know, where you can just with a round of around $5 million, you can push a startup for several years, and to really tap into a market that is, in a general sense, it has the same language, it has the same culture, and it has the same sort of a kind of people. It has its risks. Let's say political and economical, but I think in the very end, the access to this kind of technology that we are discussing these days and the access to this kind of products will in the end make a much fairer world and a much fairer society, when a lot of people that don't even have access to internet or financial products do get the infrastructure to sort of take control of their finances and to take control of let's say the course of their future. So at the end, I think it is a great opportunity for me to speak out from this part of the world and to tell a panel as international as this one. Turn your eyes and turn your heads around over here, and I'm sure you're gonna find a lot of value, as I have during the last 5 years staying here. Thanks again.
Awesome. And where can people find you?
Oh yeah, of course. I'm mostly on LinkedIn, Alberto Navarro. I'm on Twitter, but I don't use it that much. I'm mostly a spectator over there. So Alberto Navarro on LinkedIn. Let's connect and let's talk.
Awesome. I'm looking forward to following up with you. That's I love the LATAM market, and there's some super interesting stuff happening there from Canada, as well as a lot of cross-border stuff for international.
Exactly.
Yeah, absolutely. Ajit?
Okay, so I'm going to talk to the audience to this video who is not necessarily from this industry, people who are consumers, investors, and people from outside. My recommendation is that to fully appreciate the groundbreaking, path-breaking possibilities as well as achievements of this space, you really need to think afresh. There has to be an open-mindedness to how this whole thing works. So please be open-minded when you come to the blockchain space, the crypto space. There's just a lot to offer. My name is Ajit Khurana. I am primarily found on Twitter and on LinkedIn. On Twitter, my handle is AJEETK. And on LinkedIn, it's my full name. If you find more than one person with that name and you don't know which one of them is me, choose the person who is the best looking, and that would be me.
You'll never go wrong.
Yeah.
Awesome. Lawrence?
Yeah, thanks for having me as well. My closing words would be, like what Alberto said about Latin America, I would say the same about Europe. Don't underestimate the density and strength of the European corporations, and how at the end of the day they're in desperate need of improvement of their business cases, which is why we are looking all over the world, including Latin America, for the best solutions that we see fit to improve the status quo. And as a very final sentence, I'd say, don't underestimate the time. It will take a lot longer than you may expect, and don't let yourself get distracted from DeFi with that. And I'm happy about any discussions about where the industry is headed, what we see as the category winners in this, both the token and equity space. And you can find me on our website, www.blockwall.capital, or mostly on LinkedIn, if you look for my full name, which should be unique on LinkedIn.
Excellent. Dave, any last things you want to say? You're just on mute, Dave.
Sorry about that, gentlemen. It was a pleasure, attending this panel with you. Agree with everybody's sentiments here, from the LATAM side to just how much yield, European investors are looking. Just tremendous opportunities there. But I would like to echo that, some of the stuff that's happening in the DeFi and yield farming, kind of space, maybe distractions, and the goal should be to focus on long-term value creating, opportunities. Obviously, somebody on the panel said that, focus on the revenues. I would say focusing on the customers is also very revenues and returns would automatically follow. So with that being said, people can follow me here at galaxycapitalpartners.com, and I'm available on LinkedIn as Dave Misra and Twitter as Dave Misra. Thank you.
Awesome. And so final thoughts, and we've heard some excellent takes on the state of the industry today, the hot takes of 2017 all the way up to the 15-year views. And back to Ajit's point, and to speak to the audience, just there's so many pieces and ways you can interact with this industry, blockchain or fintech. Just find one thing that resonates with you and start learning about it, because you start pulling that thread, and all of us are examples. We all come from different industries. We come from finance, we come from tech, we come from all sorts of different places, and we've all started pulling threads, and we've all ended up on this panel today. There's so much that can be done with this space. There's so many paradigms and fundamental shifts that can be executed by fully leveraging and fully realizing this technology. There's so many global factors that can be undone and really evolved around. And there's so many problems that can be solved with it. So find one thing and just start pulling that thread. So my name's Alex McDougall. You can find me on LinkedIn at Alex McDougall as well, on Twitter at AlexM_bicameral. And I'm also writing a book called The Lizard and the Machine, Scaling Humanity in a Machine Speed World, at lizardandmachine.com. It's going to be a collaborative Git book. So first part's up there. Would love to talk to anybody about any of that stuff, the funds we're running, and all of the other things that are in this industry as well. So we will sign off. Thank you so much, guys. Thank you, LATOKEN team. Thank you, in absentia, Kyle Ellicott, for giving me your spot today. And we'll talk to all of you guys soon.